In 2018, the largest private equity firm ever to emerge from the developing world collapsed in 6 months. Its founder had spoken at Davos. He had signed the Giving Pledge. He had built a healthcare fund backed by the Bill and Melinda Gates Foundation. Prosecutors allege he had also been stealing from his investors for years. Nobody had looked closely enough to notice. The firm was Abraaj Group, founded in Dubai in 2002 by Arif Naqvi, a Pakistani financier, Oxford-educated, with a gift for the room. He started with $3 million and grew it to $13.6 billion in assets under management, the largest private equity firm ever built from the emerging world. The pitch was elegant. Abraaj invested in Africa, Asia, and the Middle East, places where capital was scarce and returns were possible. Growth markets, frontier markets, the places that Western money was too cautious to reach. But Naqvi had a better story than that. He called it impact investing, making money while doing good, building hospitals, creating jobs, transforming emerging economies. The healthcare fund was the flagship, $1 billion. The Gates Foundation committed $100 million. The IFC committed $100 million. CDC Group, Proparco, OPIC, all in. When the Gates Foundation is in, others follow. That is how institutional capital works. The board was delighted. On January 9, 2014, an internal Abraaj email flagged a $100 million deficit in the firm's accounts. The firm kept raising money. According to prosecutors and liquidators, the mechanism was straightforward. Investor capital, including funds committed for the healthcare portfolio, was moved into Abraaj's corporate accounts to cover operating expenses. Before audit dates, Abraaj borrowed hundreds of millions from its own co-founder to manufacture false bank balances. After the audit, the money was returned. Liquidators allege this involved over 3,700 transactions between 2009 and 2018. Prosecutors allege Naqvi personally extracted approximately $385 million over that period. In late 2017, the healthcare fund investors noticed something. More than $200 million in committed capital had not been deployed into the promised hospital assets. The Gates Foundation, IFC, CDC, and Proparco hired their own auditor to find out why. Abraaj engaged KPMG to get ahead of it. KPMG issued a report clearing the firm. The investors rejected it. They hired Deloitte instead. In June 2018, Deloitte confirmed the commingling. On June 18, 2018, Abraaj was placed into provisional liquidation, $13.6 billion in assets under management, gone in 6 months from the first press report. On April 10, 2019, Naqvi was arrested at Heathrow Airport. The Southern District of New York had indicted him on 16 counts. Dubai's financial regulator fined Abraaj's entities $315 million and fined Naqvi personally $135.6 million more. He was granted bail. He has been under house arrest in South Kensington, London, ever since. In March 2023, his final extradition challenge was rejected by the UK High Court. He has still not been transferred to the United States. 2 of his co-conspirators pleaded guilty and agreed to testify against him. The portfolio was carved up. TPG took the healthcare assets, Actis took Africa and Asia. The hospitals Abraaj had promised to build. Some were half finished. At others, patients were detained over unpaid bills. He has denied all charges. Here is what nobody put in the post-mortem. Hamilton Lane, one of the world's largest fund managers, received a whistleblower warning about Abraaj's financial practices in late 2017. They forwarded it to Naqvi. Then they committed $100 million to the fund anyway. The Gates Foundation's $100 million was not just capital, it was a signal. When Gates is in, the question changes from should we look harder to who are we to question this? Impact investing had a halo. The mission language, hospitals, emerging markets, doing well by doing good, created institutional permission to skip the questions. Nobody audited harder because Gates was already in it. Abraaj, hidden capital.